Hey everyone, it's David Mendel here with the Mallard Premier Team and My Home Group.
And I'm Brogan McGuire with Coppell Home Loans.
Thanks for joining us today. We're going to be talking about just really kind of a quick one take, except that's a lie because it's not a one take because we're going to edit this shit. No, we're going to edit it. We're going to do a quick one on appraisals of a home purchase, the due diligence period during a purchase of a home. So, Brogan, do me a favor, tell me a little about the appraisal process from a lender's perspective.
Sure. Well, at the end of the day, as far as the lender is concerned, the sales price is kind of irrelevant. You know, it is relevant in the sense that that is the agreed upon value, but at the end of the day, the appraisal is really the final answer there. And where we're kind of trying to explain with this is, obviously, if you make an offer on a house at $450, the appraisal comes back at $450, no harm, no foul, everybody's agreed upon, you're all on the same page, that's a non-issue. Where this conversation really starts is in the event of a gap. And it really in the event of a gap in the wrong direction. Because if a house appraises for more than you've offered, well, cool, you just got free equity. Which does still happen these days, believe it or not. It does happen from time to time. Now, in the opposite event of that, that's where you start to run into some trouble as far as the lender is concerned, because all we really care about is the appraised value, and there's two main reasons really behind that. First of which being, obviously, we don't want to lend on something for more than it's worth, of course. The second big piece to that is the phrase LTV, or also known as loan to value, which is really a big, crucial part of your overall mortgage picture. You know, minimum first time down programs at 3.5% down, that's going to be a 97 or a 96.5% LTV.
Value, sure.
That doesn't give you very much breathing room in the event that there is an appraisal gap. Now, that being said, even if you're putting, say, 20% down to try and avoid mortgage insurance, because 20% down is where the mortgage insurance goes away. Again, if your appraisal comes in low, and you don't have anything else or you're going to cover the funds for the difference, but you don't have enough to bring it back down to 20% loan to value again, then what you have to do is accept MI. Now, you may have been able to qualify with 20% down on no mortgage insurance, but if that mortgage insurance puts you over your debt to income ratios, you may no longer qualify for that house. So it's really, really important that the appraisal comes back where we need it to, or at least we have a backup plan that we know what gear we're going to switch into in the event that it doesn't.
Understood. And from the real estate perspective, the purpose of the appraisal, of course, is to protect the lender. A bank says we're willing to loan you X amount of dollars, but we want to ensure that what we're using as collateral, the house itself, is worth what we're lending you, or at least worth a percentage based around a loan program that we've agreed to loan you. So where it comes to the real estate purchase contract, the appraisal looks a little different. There's, first of all, a contingency, meaning that the property must appraise at least at full purchase price. Now, there's protection for you in there as a buyer of a home, because if it doesn't appraise at least the purchase price, you have a couple of options. You basically have 5 days as a buyer to state your intention. You could say, well, I can live with that. Maybe it's a $10,000 difference and the house is worth it. And in the market that we're in, where it's competitive and where values are increasing, you may say, well, even if it's not worth it today, 2 months, 3 months from now, it could be worth more. So yes, I'm willing to pay that extra $10,000 out of pocket, meaning that the lender is going to base the loan program on the lower appraised value, and then you pay the difference in cash at the time you're closing escrow when you're buying the house. Another option is, because there's this built-in contingency by default, unless that is modified in the contract, but by default, you could cancel. You could say the property did not appraise at least at full purchase price. I'm going to take my earnest money and walk away. Now, another option, based on the default language of the purchase contract, would be to cancel the contract and walk away. If you do that, you get your earnest money back and you you walk away. However, any of the money you've spent up until that point, whether it's on the appraisal or on the due diligence period, inspecting the house, pool, for termites, whatever it is during due diligence, that money has already been paid and that money is gone, but the earnest money is still yours to keep, again, because based on the default language of the contract, it is contingent upon it appraising at least the full purchase price. A third option would be to present the seller with an opportunity to reduce the price. Now, you could say, I want you to reduce the price all the way down to the appraised value, which is actually really common in a traditional market. However, in, again, this growth market where things are appreciating, where inventory is low and demand is really high, that's happening less and less, but it doesn't mean you can't negotiate. And if a buyer either has an unwillingness or an inability to pay that whole difference in cash, they could approach a seller to reduce the sale price either by the full amount down to the appraised value or by a portion. Maybe a $10,000 difference, using that same example. The buyer says, I can do 5. And the seller says, that's great. I think that's fair. Let's split the difference. And we write an addendum to the purchase contract. You make up the difference in cash at close. The lender's happy. You as the buyer is happy. The seller's happy. Everything closes. So obviously there's a lot to unpack in these two seemingly basic processes of purchasing a home: the appraisal process and the inspection or due diligence process. But we're here for questions. If you guys have questions, if you're thinking about buying a home now or at any time in the future, you just want to talk about it, you want to learn more about it, we would love to speak with you. Hit us up down here in the comments or reach out to us directly, and we're happy to answer any of those questions, whether that's from the lender's perspective, from the agent's perspective. We've got you covered. So thanks for joining us today, and we will look forward to speaking with you again very soon.
Have a great day, guys.